I'm sure many of you, like I was, very disappointed with our first paycheck, meaning that the amount we thought we were going to get, it was much more than what we ended up getting. And that occurs because the corporation has to take money out of our paychecks on our behalf and remit or pay that money over to other agencies. For one, we have the IRS or the state income taxes. You've got Social Security, Medicare, and then there could be other things taken out of your paycheck. So for this example, we have federal income tax of 20%. By the way, that could be state as well included. And we have Social Security at 6.2%. So 6,200 will be taken out of the employee's paycheck and will then get remitted or paid to Social Security. Medicare is the 1.45% times the 100,000. And then in this example, I have the employees paying health insurance premiums and stock savings for a total of 10% of their gross pay, 5 for each. So there are other things that could be taken out of the paycheck. In other words, it might the employer might offer a pension plan that employees can pay into. In any event, that amount that they'll actually get is, you can see, much less than what the employees had earned in accordance with their gross pay. Some other things that could be taken out of the paycheck could be pensions. A lot of companies will have employees who could pay into a pension plan or a dental plan or an eye plan. There's all kinds of perks that they may offer at a cheaper rate, and that gets paid by the employee through a payroll deduction. Now, as far as the employer goes, though, when it comes to what is the cost of that employee or these employees, it's more than 100,000. So let's go through. When it comes time to pay these payables, they're going to pay them all off. So all these liabilities, all these amounts they took out of the employees' paychecks will get paid. But in addition, the employer has to match the Social Security and Medicare. It has to pay an additional $7,650. And so it's the cost of having these employees is not just 100,000. Likewise, if it pays for any of the benefits, and in this example we have the employer is going to match that 5% on the health insurance, pay half the health insurance and half the stock savings. So the amount the employer is going to end up paying is not just all of the amounts they took out of the employees' paychecks, but these additional amounts that they've committed to. So the amount of cash that they'll pay for the taxes and other compensation benefits is $55,350. In other words, your assets, this equals the sum of all of your liability and shareholders' equity reductions. So that's how that payroll works. We'll go on to taxes next.